To say that 2023 has been an interesting year in Greater Toronto Area real estate would be a gross understatement. It all started with the Bank of Canada pausing their rate hiking cycle, prices kind of taken off a little bit, only to have reversed course over the last month and a bit. As you can tell from the thumbnail, 2021 prices are incoming. I want to jump into that with you today. How's it going, everybody? It's me, Rob Marsiglio, sales representative with Keller Williams Referred Urban Realty, out here in Durham region helping the great people of this area, but also doing my best to bring you weekly educational content about the Toronto area real estate market. Today, like I said, we're going to jump into what our price is doing. We're also going to take a look at a chart that I introduced last week that kind of showed where prices come since last time rates were this high. I've made some adjustments I think you'll be very interested, as well as maybe using some of those numbers to see where could prices be now if we had kind of followed the trend of income increases. But I'm getting way ahead of myself. Let's just jump right into what our price is doing. Start off with this great chart that I try to share weekly with you on Twitter. And if you're not following me over there already, what are you doing? Get on it. I do update my charts there on a regular basis, try and keep you up to date with what is going on. And this is how things are looking. So you can see the difference between last week being week 27 and week 28 this week. Pretty significant, over $40,000 drop in the median sale price for a residential freehold property. I've alluded to this in past videos. You can't just take these numbers and apply to any property across the spectrum and say, oh, well, prices are down by X percent this week to last, so this place that sold last week is going to be worth this week. This is just to give you an idea of broad market trends, to update you more frequently on the numbers than we get from Treb, which is on a monthly basis. So as you can see, the drop in prices, a little bit of a pickup in sales from last week to this week, but the trend again with our 4-week rolling average has been a downward trend in sales as well. And what I want you to kind of notice here is right here, this little peak is about the time of the first rate hike from the Bank of Canada. And you can see that it's not that prices have necessarily responded extremely quickly, but John Flynn really touched on this in his video this past week. Speculators really do respond and react to rate pauses and rate hikes. A pause was announced early in the year. We saw prices grow, plateau a bit. Rate cuts didn't come. Rate hikes started again, just 2 quarter basis point rate hikes, and prices have responded in that time. So just something to keep an eye on. When hikes come out, prices go down. When pauses happen or there's an assumption of a pause, prices seem to either level off or increase. So that's a look at what's happening kind of on the weekly basis in the Greater Toronto Area. But if we pull back a little bit and look at things monthly, we're going to see the trend that I'm talking about with 2021 prices incoming. And it's this chart here. It's the monthly look. So here's 2023, our black line. You can see the price growth up to May, the slight rollover in June, and now it's looked like a bit more of an accelerated price slowdown through July versus last year. Narrative in May was, we're up year over year. That's great. You can see the kind of big drop off in prices in 2022. The narrative is going to switch again, though, I think, in August. This line is kind of trending to break below 2021 prices by August. Could have come sooner, potentially. I don't know if we're going to get the fall bounce like we saw here in 2021. This price growth into the fall is kind of normal. Not so normal to see it keep growing into December, but I do think by August, September at the latest, we'll be back below 2021 prices. Then who knows once we get back above those prices. In order to predict what may happen with prices in the short term, I think looking at how new listings are trending, as well as how sales are trending, how that relationship kind of fleshes out in terms of active inventory on the market, that's kind of the best indicators that we have to say, where will prices go in the short term. And so on the new listing side, you can see that we did peak back. This is the week, June 17th, June 24th, a big fall off like we talked about for the Canada Day weekend. And we predicted it would bounce back. It did bounce back a bit, but still kind of underneath the elevated levels that we were at back in June. So listings have started to fall off, but that's kind of more of a recent trend that we're seeing. The sales side, however, has started to drop off much sooner. So if listings really started to drop off at the end of June, sales actually started peaking and falling off close to the middle of May. So as that gap between the number of sales and the number of new listings widens, you're going to start seeing more active inventory on the market. More active inventory, it's more on the supply side of the equation with the same demand, or as we can see, maybe even a falling off demand. That means kind of short-term price pressure downwards is what I'm seeing. And just for reference, we predicted that we would see a drop off in sales the week after Canada Day based on how I do my reporting. We did bounce back up from week to week, but it is still kind of the third slowest week going all the way back to February 25th. We dropped off below the February 25th levels for the July 8th week. We've bounced back up to kind of 1,285 sales this past week, but still kind of way below even where we were back in March. So if our sales have fallen off quicker than our listings have started to fall off, you'd expect to see an increase in active inventory. And that's exactly what things look like. So this is just across a few GTA markets. I'm not including Halton in this one just because I've been tracking these 4 markets very consistently on a weekly basis going back to last May. And I just want you to see where we're at. So we do have less active listings than roughly the same time last year by about 200 active listings. But the trend is different. We're still trending upwards in active listings this year, whereas last year we had kind of crested in June and then started to fall off in terms of active listings. Same thing with months of inventory. It's still kind of tighter this year than it was last year at this time. But again, the trend was still upwards for months of inventory going into July, started to fall off later, and then we saw the big peak early this year. Let's see where this month of inventory trend goes this year. Now, I do get comments saying, based on that last chart, okay, well, inventory is still down from where it was last year. Months of inventory is down from where it was last year. It's still a tighter market. But it's not so much about the number itself. It's about how are things changing. And what we are seeing this year is that inventory is actually growing at a quicker rate from June into July than really any year we've seen previously. I've gone back the last 15 years to show you though. And here you go. Black bars are the actual change. So you can see that from June to July this year, we're already up over 1,500 active listings. And as a percentage, that is, up over 11, close to 12% change. There's only been one other time where we have seen inventory grow from June to July. And this was back in 2020 pandemic year when we really did have a late start to the market because, April was a write-off, start of May was a write-off. People didn't really know what was going on. So you can see the trend is usually a drop in active listings from June to July. But this year we are seeing more homes sit on the market, more people try to put their homes up on the market, a way different trend than what we've seen in the past. And as you know that I harp on all the time, when we see a big change in the rate of listings building up, that is when we usually see the big swings in prices downward. So this is a couple months in a row now where we've seen kind of above seasonal changes in the number of active listings on the market, which leads me to believe, if I had to make a prediction, that prices in the near term will experience a bit of a drop off. So that's my price update. That's why I'm seeing 2021 prices incoming. Very quickly to wrap up, I want to jump into this chart that I showed last week with a little modification that I've done. And this all had to do with comparing March 2001 to June 2023. The reason I chose those 2 months is because that is kind of the last 2 times that the Bank of Canada's rate has been at 5%. So what I've done here is I've changed it to median price for a detached home instead of the average price. And you can see kind of the changes. I've also added in kind of what is the annualized growth. So you can see that across the GTA, we're experiencing anything from 6.7% annual growth to it was 8.34% annual growth in Richmond Hill. What I've also done is these last 2 rows are comparing the Consumer Price Index median number from March 2001 to June 2023 and the median household income for the last kind of the closest 2 ranges that I could find to March 01 and June 2023. So our median income has grown by just shy of 70%. That's 2.55% annually. And our CPI median has grown by 61.4%, and that's 2.18% annually. So everybody likes to try to predict, where will prices go from here? We're trying to pick different metrics. And I just got to warn you, this bit of a doomer chart that I'm going to show you. I don't know if prices will get back to these levels, but it's just kind of an exercise to show, if home prices had have followed median income growth from 2001 to today, where would they be at? And what is the difference between where they're actually at and where they could have been at? And you're probably going to laugh when you see this. It's pretty unrealistic. So we have our actual prices from March and June. Then we have our June 2023 based on growing by just less than 70% over a 22-year period, what prices would have looked like. So you can see that Durham region prices are closest to what they should be, but you're still talking almost $600,000 in Oshawa and $750,000-ish in Ajax. and Whitby. When you get into York region, you're seeing kind of $1 million spreads in the likes of Markham, Aurora, Vaughan, Richmond Hill, Peel region up in that 800, 900, $1 million level too. Anyways, just a fun exercise, maybe not so fun to look at, but what could have been if only house prices had followed income growth across the province. So there you go, just a bit of fun to wrap the video up. I hope you got some good use out of the price data that I shared though earlier on in the video, as well as what is happening with sales, what's happening with active inventory, all the things that we monitor on a weekly basis, on a daily basis over on Twitter. So make sure to check me out there. I again hope you got some value out of it. Hope you enjoyed the video. Thanks for sticking with me right to the end. And until we speak again next time, please stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.